Hello everyone, thank you for tuning in today. We're going to be going over Kogan, which is listed on the Australian Stock Exchange. This video is for Philip Kellaway, who has requested me to go over Kogan. He was the first person to buy my trading course and leave a review, and he has kindly asked me to review it, and I'd be very happy to do that for you, Philip. I thought I'd do that in a video format. It'd be probably the easiest way for me to explain everything, and I thought I'd also post it on my YouTube for you to have a look at. So hopefully everyone enjoys, and also you, Philip. Let's get into it. First, I'd like to start off with the weekly chart. So the first thing I notice instantly on the weekly chart is a support and resistance. And just coming back here to early 2018, I just noticed there's a bit of a support in here that hasn't been retested, and could be a retest here for a type of wedge, because a lot of times there's three pushes down, 1, 2, could get some type of wedge into this price. That's just the first thing I instantly notice. The next thing is here we've just had a massive bull trend. In the middle of 2020, we've just gone absolutely parabolic, going here from $4 up to nearly a 500% gain. So very, very bullish trend in here. So there is some type of correction, and that would obviously be very, very fair after a 500% incline. So another thing here is just getting the Fibonacci and bringing it from the start of the trend to the end of the trend, and just dragging it up here and dragging it across. You can see we're actually into the 618, which for my type of strategies, I like to buy between the 0.5 and the 618, and sometimes the 0.66. This zone in here is a good part, because at least you're buying in the bottom half of a type of decline, especially with just in terms of fundamentals, which I don't usually go over too much. But Kogan is a website similar to eBay, which I've used a lot of eBay, and have also switched over to Kogan for a lot of items, because they have been quite competitive, and I don't see them just going bust anytime soon. So this type of correction here does seem sort of normal. A 618 correction on any asset is normal, especially after this big incline. So they're the main things that I see. I do potentially just see a wedge coming in here, 1, 2, 3 pushes. That's just not 100%. That's something that I'm looking for, because the one thing I notice here is after here we've had a pretty bearish trend. It's been pretty bearish, very big bear bars onto each other. Even here where I can just do, yeah, that's not a doji, I'd still call that a bear trend. So we can do a 1-to-1 measured move, which I've just noticed now. 1-to-1 measured move of here, copy and paste it, and then extend it down. Yeah, and that would sort of come down to this support area, which I don't always say that my 1-to-1 measured move strategies work, but if you've gone over my course, which I know that you have, even today I can show you Ethereum did a very good 1-to-1, and they're very, very common, and they happen a lot, especially when you get big bars closing on their lows, or on bull bars closing on their highs. It's just highly gives it a higher chance that that is going to happen. So that is just a piece of confluence. I'm not saying that is going to happen, but that's just the first thing that I actually notice here. And something that I don't try and do too much is knife catch. I usually like to wait. As you've seen, I like to catch the momentum. I like to wait for a large momentum, big trend, and then I don't have to catch it exactly. And then I'll do a 1-to-1 move, and I'll catch that last 1-to-1 move. I don't have to catch the first one, but I'll catch the last one. But for me, it just gives me a higher probability, rather than trying to catch and get the perfect price. I prefer now taking trades that give me a higher probability, although I won't capture 100% of the trade. So that's just the first thing I notice on the weekly. We'll move over to the daily, and finally I'll also do the 4-hour. Okay, so now I've zoomed in and we're on the daily. So we've got into the middle of last year until this year here. And some of the first things that point out to me is I've done a lot of back testing on gaps, especially in the stock market, because I used to trade a lot of the stock market. And these gaps, a lot of the time, I don't know exactly when they will fill, but they fill a very, very high percentage of times. So a lot of my profit taking targets do incorporate sometimes some of these gaps in the market. So as you can see, this is where price has never really traded after it went down, and usually price needs to trade it. It's not saying that that's the exact price it will go to, but usually price does come back here. So that's one of the first things excuse me, that do point out to me. Okay, just zooming in a little bit closer here. So we're going to come into just the last couple of months here. So one of the little things that points out to me on the daily is we do have some type of wedge pattern. 1 push, 2 push, 3 pushes down. So usually we either connect the first and the second point. So we'd either go first to second and it extend down to here. But the most common is actually extending the first and the third, where the second extends through that point. So that's one point here. 1, 2, 3 pushes down. But because we're in such a bearish trend here, again, just being large bearish trend bars, every bull bar is very tiny and not many closing on its low. And if they do, they're instantly sold. So that is not a bullish sign coming through here. So that's why if we were to buy here using this wedge, it would be more for a scalp. It wouldn't be buy here and hold forever, unless you want to do some type of dollar cost averaging strategy. That also works. But I would personally, this price down here does look good, but it'd be more of a scalp, potentially up to these prices up here, potentially even up to this gap to quickly fill this gap, which still would be a nice gain, close to 100%. But since we're just in a quite a tight bear channel, I wouldn't be looking for an overly bullish explosion just of yet. I usually like to see some type of explosion first before, but we can even come in here and we can see it is forming a type of head and shoulders. So we've got head and potentially we'll come over here and then come up for that one. So usually when we get a wedge, we'll get 2 pushes up. I'm not sure here if it's been 1 push, 2, or if we'll then get 1 push, 2, up something like that. Something potentially could be happening somewhere like that. The thing is, when you do take a trade here, you do have a really great risk to reward because you can just put your stop here. The thing is when you have a really good risk to reward, usually the probability is lower because you can't have a perfect trade. Someone on the other side has to take the trade, and nobody's taking a perfectly perfect trade because instantly bots will take that trade. So if I did, the stop would be here, but I would be waiting for even just a little bit more, making sure this comes on and then getting a nice couple bull bars closing on their high before then attempting to come up to this type of price. Next, we'll move on to the 4 hour. Now, just coming into the close 4 hour, we can see that even coming down here, there's not too many real big bull bars closing on their high. And when they do, they're instantly sold. So it's just like a couple of bull bars, bear bar, bear bar, bear bar, bear bar, bull bar, really good bull bar, but then bear bar, bear bar. So it's like really good bar, but then bad conviction afterwards. So what is sort of telling me is price is struggling here, and even coming back to this price is just a doji bar, just multiple doji bars, and we're starting to swing down a little bit. So as price, it is starting to go. We had a big explosion. So the 3 hallmarks of trading is basically a breakout, then we get a trading, then we get a channel, and then we get now a trading range. So we get a big breakout downwards, then we go downwards, but a little bit more to the side, and then here we go to the side, which is sort of what's happening. So we need to see how the price action is going to go from here. And just lastly, I want to go over the ascending triangle. You mentioned an ascending triangle. So for me, what a triangle is, this is a symmetrical triangle where all the lines are basically symmetrical. And what an ascending triangle is when all these lines are now ascending upwards. So you can see we can still got this triangle shape, but it's now ascending to the upside. So you mentioned an ascending triangle here, but I really don't see much of an ascending triangle pattern yet. An ascending triangle pattern is actually more of a bearish signal. So when you get an ascending triangle, you usually come to the downside. And when you get a descending triangle, which looks like this, usually come down and then you break to the upside. And even then, I don't quite see much of a descending triangle yet. There just isn't enough play with the price for me to be able to say there's any type of triangle, unless we go real close on the 5 or 15 minute, which I like to trade. But from what you're saying, you're speaking about the weekly and the daily. So I can see that you're trying to keep it to a bit of a longer time frame, which is fine. All my strategies I've used and back tested do work on the weeklies and dailies, but they also work on the 5, 15, half an hour, 1 hour. So I don't see any triangle here. And usually even here, just looking at this head and shoulders, I usually like patterns to play out quite large. So I like it to be, play out in this type of really far time frame spread out. When they're really close like this, it's a little bit less of a likelihood, in my opinion, that the pattern that you want to play out. I'd prefer it to be, you know, that be, and then the head come down here, and then the shoulder be over here, just because I like the pattern to be a bit more pronounced. It's a little bit hard to squeeze it in there, and that's just my personal opinion. But I've had a lot of attempts at trying to buy the bottom, and now I just prefer buying into strength. So looking for a lot of strength, trying to find a one-to-one measured move and going with that. Finally, I just want to quickly show you something on Ethereum that happened today and yesterday. So we'll move on to that really quickly. Okay, I just want to really quickly show you this. This is on the 30-minute time frame on Ethereum. All I want to show you is this is a bit more of a pronounced 1, 2, 3, close to a head and shoulders, but you can see it's very pronounced where it really comes up, it really comes down. There's a bit more of a time frame throughout it. Then you can see here we got a low, and we can connect. We've got even a type of wedge. We even got a high low double bottom. And then we got some nice push up. We got 1, 2 good bull bars. After I see this, then I'm more inclined to go long. And then what even we got in here is we got 1 big bull, big trend bar, 2 and 3. So then we actually got an extension target, 1-to-1 extension. Control V, Control C, Control V, extend that here. And as you can see, as soon as we went through it, we just got an instant bear bar down that went 3% in half an hour. So really quick, especially on an asset like Ethereum. So you can see instantly came through, and then bam, we're just down. So that's why I really like these one-to-one measured moves, because not only can you catch them to the upside and even then catch it, put a short up here and then catch another % or 2 there. So I just want to quickly show you that. I hope you really like my video and going over Kogan. Again, I'd just like to thank you so much for purchasing my course, and anything I can provide value, I'm happy to do so, and you've given me the motivation to make another course and continue. So thanks very much for watching, and thanks everyone for watching. I appreciate it very much. See you in the next video.